Well, to help us work all this out, we're joined by Tara Sinclair, a senior fellow with the job search engine Indeed.com. Thank you so much for coming in.
Great to be here.
Well, that robust economic data, we had a bit more of it today. Manufacturing expanded to a 2-year high. Private employers adding 246,000 jobs last month. Things are looking pretty good for the US economy. Why not raise rates?
I think the key thing that they pointed out in this statement is that inflation is still below their 2% target. And that leaves them a little bit more room to take their rate hikes at a very measured pace. And they're still concerned about the overall health of the economy. They're still saying that there are both upside and downside risks to the economy going forward. So they want to take those policy moves very slowly.
So we're apparently near full employment. Can you tell us what that means? And what about the quality of those jobs that are being added? And what about pay? Is that at a level that we want to see at this point?
Right, these are all really important issues. When we think about full employment, it's really important. The mandate that the Fed has is specifically about thinking about the national employment conditions, and they're thinking about the amount of jobs they can create without overheating the economy and creating too much inflation. And so that doesn't mean that every single person has a job, and it definitely doesn't mean that every single person has the job that they want or even that they are skilled and qualified for. And I think that's been a real frustration for people on the FOMC, such as Janet Yellen, who have really seen that jobs aren't always created of the same quality. And they'd like to see higher quality jobs, but it's not always in the Fed's control.
Now, President Trump has said that he wants to bring jobs back to the US, especially manufacturing jobs. You know, are these figures proof that he's already having a positive effect, or is it a bit too early to tell?
Well, it's definitely too early to tell. In fact, the jobs numbers we're going to get on Friday are actually going to be based on a survey that was conducted before inauguration. So this is still very, very early days in the administration, and most of the economic statistics we're going to see coming out in the first couple of months aren't going to be related to his administration yet.
Now, we are likely to see some pretty big policy changes under the Trump administration and with the Republican-controlled Congress, major infrastructure spending, tax reform. Can you tell us what the implications of that could be in terms of the US economy and the debt? You know, we heard during the campaign that some of Donald Trump's tax plans could increase the deficit by $7 trillion.
This is one big thing that I was looking for in the Fed statement this week, was to see how they were reading these first policy statements. And one thing that was really quite surprising to me is that looking at their statement, they're not seeing a lot more inflationary pressure coming from any of these initial policies coming out of the administration just yet. So they're not seeing any big macroeconomic implications, but we'll have to wait and see.
Let's talk about inflation a little bit then. The Fed says it wants to rise to 2%. But Janet Yellen's warned of a nasty surprise if they wait too long to raise rates. What can you tell us about that? What does she mean?
Well, what Janet Yellen's really concerned about is seeing inflation move much faster than what most forecasters are expecting. And you can imagine that if businesses are planning on inflation being around 2%, and then all of a sudden their costs go up very, very quickly, that's going to cause a lot of disruption for business planning and possibly slow job growth opportunities.
Now, there's been a huge furore over Trump's temporary ban on immigration from certain Muslim-majority countries. Is that bad for jobs and business?
Well, this particular ban was focused on security issues. That was the motivation for the ban. But when we think more broadly about the impact of immigration on labor markets broadly, there's a substantial amount of economic research that suggests that on net, immigration is very good for our economy.
And just quickly before we let you go, the Fed has forecast that it will raise rates 3 times this year. Do you think that's still likely to happen? When do you think the next one would be?
Well, one thing I was looking for in this report was to see if they were hinting that March was already going to be the next rate hike. And that doesn't look like they were putting a lot of hint in that direction, but it does look like they're still expecting to raise rates multiple times this year, but maybe a little bit further on in the year.
Okay, we'll have to wait and see. Thank you so much, Tara Sinclair with Indeed.com. Thank you.